So how is good news bad news? One of the things that I wanted to ask you even before we start today's video is one of the big concerns that I have with up and coming, not just interest rate hikes, right? The Federal Reserve already announced that they're going to be slowing down in the way that they raise interest rates. That shouldn't be very concerning. We've seen inflation come down from 9.1% now to 6.5%. The concern that I have is we haven't really seen the Federal Reserve reduce the balance sheet. And I don't really think that a lot of you understand how significant that is. One of the things that I was asking my Learn Plan Profit group is, would you guys like me to make a video that I can post here on YouTube explaining how the reduction of balance sheets, right, or how the reduction of the balance sheet through the Federal Reserve affects the market, especially interest rates, because we all know that's why the market began to really sell off, right, because it was more expensive to borrow money. So if you guys would like to see that video, let me know down in the comment section. Get this video to over 2,000 likes. And again, it just comes down to how bad you guys want me to make that video. But without further ado, let's go ahead and provide you with a quick little market update. The market is uptrending for no apparent reason. Higher highs, higher lows. It's literally struggling to pull on back. Not that it's no apparent reason. We had a series of economic reports that were released today from the personal income. Again, those didn't affect the market too much. The ones that I want to talk about is pending home sales. Pending home sales, which doesn't come to me as a surprise. One of the things that my business partner Nick Palladino told me is that he has seen more activity now than really in the past 3 to 4 months. And this report was based off of December. The expectation was that pending home sales, meaning properties under contract, would be down 1%, but we actually saw an increase of 2.5%, meaning that more properties are under contract than what was expected, right? We actually saw an increase from month over month, and this is great for the economy, but let me explain to you why it's not the best for the Federal Reserve. Then we had the Michigan Consumer Sentiment Report. This pretty much came in as expected. The expectation was 64.6, came in a little bit higher than expected, 64.9. Again, that one doesn't really matter to me. Now, why is good news bad news right now? So we all know that, originally the Federal Reserve wanted the economy to feel the pressure, right? They were raising interest rates. They wanted the economy to slow down. So bad news was really, or good news was bad news, and bad news was good news, right? Because if we saw slowdowns of the economy, we wanted the Federal Reserve to slow down. Now the Federal Reserve announced that they're going to be slowing down. But now the question is, now that we know that they're slowing down, right, from the 0.75% interest rate hikes, there's going to be an interest rate hike early February, right? It's expected to be around 0.25%. So 1/3 of what the other ones have been. So that's a slowdown. What's the concern now? Well, by seeing that we have a stronger economy now and inflation has come down to 6.5%, let's give a round of applause, right? Because the credit needs to be given where it's due, and rightfully so, right? We've seen an amazing month for the month of January of 2023, and I know that I feel a lot better about the overall economy now than I did last year. But one thing that has not happened all of last year, they tried it, I think, in the month of August, and it affected the market too much. The Federal Reserve needs the economy to be somewhat strong right before they begin to reduce balance sheets. Because if the market's already at 52-week lows, and then they begin to reduce the balance sheet, that's just going to add more fuel to the fire, right? So now, because interest rates have been dropping, because inflation has been dropping, so has interest rates directly because of that as well, right? Markets began to recover. If you look at Tesla, from Tesla on January 6th, if I'm not mistaken, let me go ahead and pull it up. Tesla from oh my God, it's up another 9.5%. Tesla from January 6th, it was at 101. It has gained 70% in just 21 days of trading. 73%. It's had a huge rally, and rightfully so. But so has the market, right? If we look at the overall NASDAQ market from 52-week lows, which is right around that general area, to where we're at right now, 13%. TQQQ, 3 times that, nearly 40%. Congratulations, right? Now that we're going to transition into February, so I think that the market's going to rally all up until the end of January. I think we're going to finish very, very strong, just because they want to finish the month strong. Great. When they begin to raise interest rates, pay attention to the Federal Reserve and how much they begin to reduce the balance sheet and how that affects the market. That's going to be the next hurdle. We've seen month over month, I talked to my Learn Plan Profit group about this in today's live session. We've seen month over month from 9.1% to like 8.9, and then 8.5, and then 8.3, and then 7.9, right? We've consistently dropped month over month. We've seen inflation actually drop. This is where I believe that when they begin to reduce the balance sheet and interest rates begin to pick back up again, meaning it's more expensive to borrow money, this is where I believe that we will see those inconsistencies, where we will no longer see month after month inflation dropping. How do you think the market's going to react? That's what I want you to take into consideration. This shouldn't scare you. This should just encourage you to prepare and to learn more. That's all. No one knows. No one can predict the future, right? They're going to have to reduce the balance sheet. They know they did. They've been announcing it. It's not rocket science, or it's not a secret. So what can you do? Don't complain. Don't point the finger at other people of how you could have better prepared in advance. Begin to learn more, right? I'm going to work on a video, get this video to over 2,000 likes. I'll work on the video for you guys and explaining how the Federal Reserve reducing the balance sheet affects the overall stock market. I hope that, I like to keep things very simple. I like to explain things in a very simple way. But the economy is now strong enough where it can now tolerate a hit. And I think that's exactly what we're preparing for, just to take a little bit of a hit. Are we going to go back to 52-week lows? I really hope not, right? But I don't know. We haven't really seen the Federal Reserve reduce the balance sheet, and we have yet to see how the market reacts. So I'm excited to follow up. Again, get this video to over 2,000 likes. And again, if you have any questions on how you can work with me on a closer basis, it's the second link down below. You guys know I work with them every single day. It's my Learn Plan Profit group, and they are the only team that get to work with me on a closer basis. So you can either join us or just stay subscribed here on YouTube, and I guess I'll keep you up to date with some of these videos. So if you have any other questions, feel free to message me via Instagram or Discord. And that's the first or third link in the description down below. And do not forget about our Apple Watch giveaway, and that's the fourth link in the description. I'm using the Webull trading application, and if you want to use it, make sure that you use my link and deposit $100. And by using my link, you will earn up to 12 free shares. I will earn 1 free share. So it's a win-win, but you have to use my link, and that's that fifth link down below. It is a free trading application available in the US. So appreciate your time. Like always, let's make sure that we end the year on a green note. And don't forget, happy Friday.